There are plenty of stories of people who start out with nothing, yet over time they're able to build multi-million-dollar portfolios. But how? If you believe you're poor and don't have money to save or invest, then you're always going to be poor, thinking you don't have money to save or invest. Is that what you want? You get to decide if you want to make a change. You get to decide if you want to be an investor, even if you have no money at the time to invest. If everyone thought they needed money before they could save or invest, then the only people saving and investing would be the rich. But that's just not quite the case, because if you look around, there's plenty of cases of people doing just that without having loads of money. Thanks to apps and the internet, there's tons of companies you can use to invest for you, save for you, doing it all automatically, and even giving you financial plans for yourself. It's all there thanks to technology. Just do your research. Investing is different than just opening a bank account or opening an account to invest in stock. Investing really comes down to strategies, because you could choose to invest in coins, stocks, real estate, a business, but then you have to ask yourself, okay, what kinds of stocks? What kinds of coins? What kind of real estate? So it comes down to the strategies that you decide to use. For example, if you're in your 20s or 30s, your strategy is going to be completely different than a 60-year-old. Because in your 20s and 30s, it's just YOLO, let's travel and start my 401k account and get a company match. But when you're in your 60s and 70s, it's like, well, how in the hell am I gonna live till I'm 80 or 90? So the strategy is a bit different. You also need to understand your investor profile. This is basically how you like to invest. Do you only invest in corporations that you deem worthy, that are good for the environment? Or do you see yourself as someone who is really risky or isn't really risky? Which then plays a part into your risk tolerance level, which is essentially how much risk are you willing to take? If you lose 10 grand tomorrow, how pissed off are you going to be? So the first step is just making that decision and deciding on a strategy by which you'll invest. And from there, you analyze your risk and the type of investing you want to do. But it all starts with that decision. Regardless of your profile, your tolerance, or how you decide to invest, it all comes down to the fact that you and nobody else is responsible for your finances, and so having that knowledge can come in handy. Remember, investing is for the long haul, and it's not there to get rich quick. You can if you get really lucky, but more than likely, you won't. So be responsible and take small, calculated steps based on what you're comfortable with when it comes to investing. And over time, the goal is to become rich. Thanks for watching. Be sure to follow me on Twitter, Instagram, and Facebook to stay updated on the latest. But more importantly, to stay updated on YouTube, press the subscribe button below.